Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and as I like to remind you each week, I'm also the author of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. And my company, Taylor Hard Money Advisors, is in partnership with Chen Lin, who publishes What is Chen Buying, What is Chen Selling. To sign up for Chen's letter or my letter, go to miningstocks.com. miningstocks.com. You do need to put your name on a waiting list to sign up for Chen. He'll be accepting new subscribers at the beginning of the next calendar quarter. For the first half a month, basically, through would be in July. I want to thank each of you for listening to this show, making it one of the more popular shows on the Voice America Business Channel. Also like to encourage you to keep your questions and comments and whatever you have to say coming to questionsfortaylor@gmail.com. The questions, the number 4, taylor@gmail.com. And I'd like to invite you to follow me on Twitter under my handle is J Taylor Media. J Taylor Media. Also want to thank our sponsors for making the show economically viable. Our sponsors for today's show are Carlisle Goldfields, RN Resources, Copperbank Resources, and Calinex Mines. I've titled today's show, Making This Mean, Nasty Gold Bear Market Your Friend. Well, Rick Rule and Michael Oliver will be returning today, and Michael will be with me just momentarily here. Abraham Drost will be with us for the first time. He's the CEO of an up-and-coming Canadian gold mining company, Carlisle Goldfields, in fact, one of our sponsors. He will be with me at about 1:15 the hour. Michael Oliver, who I really love to have on the show because of his savvy market expertise and market views, which at least from a technical, as technical analysts go, I find about as useful and about as important and accurate as anybody I've worked with or dealt with or looked at over the years. So I'm really happy that he's agreed to come on a fairly regular basis. He'll be with me in just a couple of minutes. We, of course, want to focus on gold and the precious metals to a great extent, but also, time permitting, some of the other markets like stocks and bonds and oil. Thereafter, Abraham Drost at about 1:15 will be with us, and then after him, Rick Rule, the chairman of Sprott U.S. Holdings, will join me to help us turn this very nasty gold bear market into a friend rather than a foe. At least we hope Rick can help us do that. But right now, Michael is with me, and I'm really glad to tell you that. He is... we want to hear what he has to say. Welcome, Michael. Thanks for joining me again.
Jay, thanks for having me back on. Thanks.
Always good to talk to you about these markets. I must say I really thoroughly enjoy your frequent market missives that come through, and especially the weekend ones, because you seem to sort of round everything up, the most important markets at least. And I should tell our listeners it's OliverMSA.com. Oliver, M as in Mary, S as in Sam, A as in Albert.com. Go there to learn more about Michael's services, and if you are an accredited investor, you may want to consider subscribing to Michael's letter. It used to be available only to major corporations, but now he is making it more broadly available to the investing public. Michael, on your weekend report, you noted that we last saw some weakness in gold. And in your weekend missive to your paid subscribers, you said, and I quote, gold is into multiple weeks of short-term decline, aging in the process in MSA's views, noting that a downtrend structure has developed on this short-term oscillator. You noted that we need to see a daily close above 1197 this week to convincingly shift out of a negative short-term trend. But if in the event we are not able to exceed 1197, you noted that by May 8th, the hurdle will be somewhat lower at 1188. Well, today now we've seen some considerable strength in the gold market. I think I was looking at 1213 or something like that as we were approaching showtime. If your bets are on the bullish side of this market, Michael, what would make you very comfortable? Are you feeling a bit more comfortable now? How do you feel now about being a long-term bull, if indeed that's the position you're taking?
Well, I can't put myself in that position yet, but I do think the bear market is essentially over, if not totally over. I think that low in November was it. The retest in March was a successful retest, didn't reach the November low. And I think the market's just waiting, coiling up just below potent structures on long-term momentum that say, okay, not only are we not going down, we're turning up. After all, gold at these price levels, if you just take a chart and look back at the last year and a half, you've oscillated either side of 1,200 for a year and a half, 2 years now. So it's really not going down. It's just not going up to satisfy the bulls, and also not going down to satisfy the mini bears. So it's sort of a range-bound situation, but it's holding its own very well. Even though I regard it as inverse to the S&P, if you look at an S&P chart for the last several months anyway, the upside, you would think gold is probably at $900. It's not. That in itself is a statement, I think. My big numbers on gold that really get me excited is not that short-term upturn that we had from last Friday's close through yesterday, which flipped as far as I'm concerned, flipped the short-term trend back up. Forget the short-term trend. Those change every 4, 5, 6 weeks. The big numbers are 1255 this quarter, any monthly close at that level. Well, that's about 3.5% above where we are right now. So it's not a big, it's not a reach. And then I've got another tier in the high 1270s. And if I got through both those levels, as far as I'm concerned, that's it. It's done. We're going up. And I think it could be of the tone of a bottle rocket. I think you've got a couple $100 easy travel without much resistance. I'm also watching silver. Silver is actually poised a little bit better than gold to achieve its first tier breakout. Right now, silver's about 1658, 59. It's been toying around for the last month or two. We had a high early in the month at, I think, 1730. But if you can close a month out around 1720, any month during this quarter, I think it's broken out. And I would look at both gold and silver for the confirming of each other. But they both look poised to go up, and I would say they're lawyering with intent to do that.
Okay. And they have bottle rocket potential? Is that the
picture that you painted? I think the verticality could be swift, not layered, not burdensome, but just whoosh before you get to any sizable resistance in either of them.
Yeah, well, that's music to my ears, Michael, and I have to, we all have to be careful that we don't believe what we want to believe. And I know one of the things that I value about your service is that you're agnostic with respect to the markets, which way they're going to go. You say, I'll let the numbers talk to me, and then I'll make up my mind. And so from a structural basis, you make your decisions. And so you're always, I guess, sort of assessing in your own mind probabilities of one direction or another, short-term, longer-term.
It's tough to do that sometimes, particularly in the case of gold, because I get in the business in the commodity side back in the mid-'70s when they legalized it, and I'm a gold bug, but I'm also a technician, and yes. You've got to fit the two together, and the gold market breathes like any other market breathes, and I think it's had its exhale, and I think it's ready for an inhale again. So.
Right. Well, good. Well, thanks, and I, certainly want to hear that. But at the same time, as you say, you have to put your emotions aside and look at reality as much as you possibly can. With about 3 minutes or so left to go, what about oil? I'm looking at a long-term chart for oil, and my goodness, in fact, I pulled up a 25-year chart for oil. And you saw that spike up to $150 before the Lehman Brothers debacle and the financial crisis, and we went from 150 down into the 30s, 35 or so, climbed back up to around 100 for a couple of years there, and now, or for several years, sort of bouncing around and hitting up to 110 even. This most recent decline was almost as spectacular, or half as spectacular. It stands out as one of the greatest bear markets in the last 25 years that we've seen in oil. You think we're in a basing period yet, or do you think we could still?
I think we've entered the basing pattern. That doesn't mean you've seen your low, but I think from the point of view of do you have serious more downside, forget it. We broke down at $96 according to my work, dropped down to a low of just above 42 recently. What more do you want? I mean, yes, it can labor and build a base, which is what I expect. I think this rally is not going to succeed, but I don't think that means we're going to $20 oil. I think what it means is this rally needs to peter out, roll back over, and continue the basing process that we had from roughly December through March, really. A lot of sideways ink, and I think this effort to come up out of that ink by getting above 54, which had been a ceiling for several months, is phantom. I don't think it holds. But that doesn't put me in a big bear camp. I think, if you missed the big bear, the move from 96 into the 40s, you missed it. don't worry about the residue. And I think the problem with oil is that its break is recent, meaning in the last several months. Most of these markets that have been beaten up badly, like gold, silver, sugar, and so forth, they've done a lot of basing.
Right.
And they paid their dues. I think oil has more dues to pay in terms of time submerged, and put it that way.
Yeah. So you're not at all, Michael, you're not at all surprised by the move from the lows of about 43, 44 up to 58, huh?
Yeah, I had a report a few weeks ago. I argued we'd have a bull trap here, meaning we'd break out above the 54 level, but it would no doubt excite some people because it's a very clear price chart breakout. But my momentum work says now it doesn't have sustainability in all likelihood, in which case it's a teaser. I don't think if you bought into it, you're going to be destroyed, but I don't think you're going to make any money, unless you're a trader, that is. But for those looking for investment situations in oil, I think those opportunities will continue to exist for several more quarters, while oil itself undergoes a writhing, horizontal-type basing action.
All right, Michael. With about 30 seconds left to go, you still see the S&P and the major U.S. equity indices in a topping process?
Yes, definitely. In fact, in late last year, I projected that if we made a new high, and I wasn't sure we would above last year's high, we'd get to 2130. And in March, I refined that to a precise number. I said 2160. 2126. We got to 2125.92 yesterday. It would be funny. I'm not saying it has to stop there. There is some momentum resistance there that is very clear on long-term momentum, not on price. And we wobbled hard from there, 30 points, in fact. So it'd be very curious if we can't overcome that very soon, because that might have been the high of this move. Next month, if you get the S&P down in the 2070s or lower, I think we've topped.